All right, so we are at 12:03, so we are going to start. I am going to go ahead and mute everyone. So if you have a specific question, go ahead and put it into chat, or you can go ahead and unmute. We definitely want this to be a Q&A, and I do have a couple of topics I want to go over. Let me find my notes of where I want this to go today. Sorry, I got a little bit disorganized. I was on another call right before it. Because I've really been getting a lot of the same type of questions, and I've seen a lot of misinformation out there. So that's really my goal with this call, is to get information into your hands so that you in turn use it to be an expert to your sphere and to your database, okay? So first of all, I want to talk about forbearance. In fact, I have one realtor that has asked me to do kind of an interview style Zoom call with her that she's going to push out to her database. It'll be super easy to do, super low key. If you want to do something like that with me, we absolutely can. So you're basically interviewing me, so you come across as the host interviewing an expert. I'm happy to do that for you. So first of all, forbearance is not forgiveness, and forbearance is this close to foreclosure. We have real estate agents, I don't think in our market, but in other markets, that are reaching out and saying to their clients, hey, you can buy a house right now, and the government isn't going to make you have to make a payment for 6 to 12 months. Let me explain to you in a simple way, because that's the only way I can understand it, even though it's a very, very complex thing, that when someone goes into forbearance, right, their principal and interest is still due to the investor from the servicing company. So that servicing company, Wells Fargo, whoever it might be, the servicing company still has to pay principal and interest to the investor, right, every month, no matter what. They also have to pay taxes in November, and they have to pay insurance when that annual insurance becomes due. So when people go into forbearance, the government's not writing a check to that servicing company to cover those things. So the ripple effect of people going into forbearance is going to have catastrophic, let me repeat that, catastrophic results to us as an industry and to the housing market. So the, what's his name, Cabrero, that basically came out and offered this forbearance in the CARES Act, basically predicted that about 1% of homeowners would go into forbearance. We are now currently at between 5 and 6%, and they're expecting it to go to 10%. Our industry will collapse if enough people go into forbearance. So that's the first thing. It's a bad thing to go into forbearance. Make no bones about it. Now, are there people that this is going to save them from foreclosure? Absolutely. There is a very small segment of people that this is just a blessing for them. But this is not a way for you to say, oh, I don't have to make a payment so I can save up and go on that vacation as soon as I can get on an airplane. And so we really need to get that message out there, because what's going to happen is forbearance, again, does not mean forgiveness. So that payment for 6 months is going to add up. And at the end of the 6 months, that 6 months worth of payment is due. Now, most likely they will have the option of paying it over time. So their payment will go up to cover it over a certain amount of time and repay it, or it will be added to the end of their loan. But again, remember what I said, what about taxes? What about insurance? Nobody is addressing the shortage that this is going to cause when it comes time to pay property taxes and insurance. So first and foremost, people need to take the stimulus package, they need to take their unemployment benefits, they need to take the ability to tap into their 401k without a penalty to make their payment before they go into forbearance. So any questions for anybody about forbearance? You can unmute or you can put it into chat, and hopefully I can watch all of this. So Shelly's asking, is it 6 months or 4? So right now it is 6 months. And here's the crazy thing, you don't even have to qualify. So calls going into servicing companies are like increased 150%. You can't even get through. Used to be a 4-minute wait time. Now it's about a 20 to 30-minute wait time to even talk to a person. Because all you have to do right now is say, I want to go into forbearance. You don't have to prove that you're laid off or anything. After 6 months, my understanding is you do have to prove that you don't have the ability to pay, and then you can get a 6-month extension. So up to a year of forbearance. So crazy. Good question. Anybody else? Yeah, Tyler, can you unmute or do I need to? Oh,
I got it. Sorry, I was trying to find my mouse on my screen. I've got too many screens open. So I've got a couple of investors. One of them is they've already gone through forbearance or whatever. They're starting those proceedings of forbearance, and he turned to me and he goes, "So what's the effect of this?" After he already made this phone call and started the process, he turns to me and he goes, "What's the effect of this on my ability to purchase property?"
Ah, that is
And I
such a
said,
good question.
most likely it's going to kill your ability.
Yeah.
But I was operating from a real estate agent perspective, from a lender perspective.
Okay.
What will this do to investors?
So if we go back to 2008 and look at people that went into forbearance there, it killed their credit. Now, technically in the CARES Act, it says that will not negatively affect your credit, but it will be noted on your credit that you are in forbearance, and lenders are not going to be willing to give you a mortgage if you have a mortgage in forbearance. So that's one issue, and I'm so glad you brought that up, because it can negatively affect your ability to refinance or get another mortgage. And a lot of this is uncertain, so I don't know how long it's going to affect you or exactly how it's going to look, because everything is really, nothing is set in stone right now, and there's going to be a lot of fine print on these forbearance agreements that people don't really understand how it's going to fully affect them. The other thing I want to bring up is if someone closes on a loan and they go into forbearance before their first payment is made, the lender, so me specifically, this just came out last night, me specifically, not even security home mortgage, but if I can't afford to pay it, then it is going to be security home mortgage. If it is a first-time home buyer, there is going to be a 5% penalty. So on a $300,000 loan, which is my average size, that's a $15,000 penalty I have to pay. If it is a refinance, it is a 7% penalty. That is $21,000 penalty if that client goes into. How many of those do you think I personally and my company can take before we basically have to close our door and stop doing business? It won't take very many. So the people that think that they can buy a house and immediately go into forbearance, they are really going to be, they need to understand the negative consequences of this, and I can't stress that enough. So please share that out into social media and to your sphere of influences, because it's such a vital piece of information. Now, if they're already in servicing and they've been there a while, I'm not going to be hit with that kind of a penalty, but it is still negative to the company. So any other questions on forbearance before we move on to the next topic?
Can I follow that up with just another, hopefully quick question?
Yeah.
How are you testing that out when you're doing the application? Obviously, this forbearance thing, are you asking additional questions during the loan application? What are you asking?
Yeah, that started changing about 2 weeks ago. So we normally have to have pay stubs up to the date of application. We now have to have pay stubs up to the date of closing, and we have to have a COVID-19 letter in the file at closing that basically is proof that their income and job is not being adversely affected by COVID-19. And so we've had clients that at the point of close, so they closed on a Friday, it's supposed to fund on a Monday, they've got 4 kids and a wife in a moving van on Monday waiting for funding to get their keys. He got laid off between Friday and Monday, and we could not fund the loan. Now, luckily in his situation, mom and dad came in and co-signed, and we were able to close the loan about a week later, right? But we're talking a lot of people being negatively affected by that. And so up until funding, we are verifying that they are actively employed. So, and self-employed people, I've got with someone right now, he owns a film business, and his wife sells really cute dog bandanas, right? They're having to give me very up-to-date proof that there is money going into their bank accounts for their business. Unheard of in the mortgage industry, that we have to get that kind of a proof that they're still getting qualifying income. So let me check chat. Any other questions? Okay, I want to move now on to credit scores.
Les,
okay.
Sorry, I have a question.
Oh, yeah, Shelly, go ahead.
I typed it. I just said, do you expect to see a lot of home sales in the next 6 to 12 months then? Like people are trying to just cash out their equity and get out and either downsize or rent or whatever until things get more stable?
You know what, that's a really good question. And that's why it's so important that you spend half your day right now reaching out to your sphere and asking those questions. How are you feeling in your current home? I mean, I have someone right now, they just went into a blended family. Oh, Shelly, it's your client, just went into a blended family situation. And they're like, yeah, we were going to wait a year, but we realized we can't stay in a house this size as we blended our families, right? So they're ready to move up. That's a great thing. And they both have income, and we're going to be okay. But you've got other people that are saying, you know what, I have a lot of equity in my home. I don't need a home this size. I want to downsize, right? Or maybe they have rental properties and they're like, you know what, the uncertainty of, are my renters going to be able to keep paying me? I don't want to be a landlord anymore. So as a real estate agent, you have some unique opportunities to be asking qualifying questions and putting out talking points on social media that could really drive your business over the next 6 to 9 months. So how it all plays out, Shelly, I honestly don't know. I mean, in 6 months, I want to come back and I want to ask everybody, how did this play out for you and your clients? Because I think we're going to hear a lot of really interesting stories.
Right. My biggest concern is I don't want to put a negative spin on it and everyone, like the panic, you know what I mean? When you hear of this, it just changes the whole tone of it. And at the same time, you want to help people. So you want to like almost spin it that it's not negative. You know, you're still okay. Maybe it's time to downsize and not have a big home, but it's hard balance.
So how I actually, and I don't think it's a spin, I think this is the gospel truth here. We're in a unique situation in the state of Utah that we have a very strong economy, and the COVID-19 has really not had as much of an impact as was projected and as other states have seen. And we have such a strong job market and a very diverse job market that is not extremely dependent on tourism. Like I grew up in Alaska. Think of what's happening in the state of Alaska. I grew up at my hometown is one of the cruise ship stops, right? Just imagine what they're going through. So we have a unique situation that Utah has a strong economy, a strong job market. We still have a shortage of housing for the people that have jobs. So you can come with a lot of really positive things, whether that means you want to stop being a landlord. There's buyers out there for your rental properties. Or do you want to buy that larger home for your family, right? So I think we're in a unique position. I mean, think of Las Vegas. Anybody that listened to the interview of the mayor of Las Vegas the other night, oh my goodness, the woman's a freaking idiot, right? But imagine what that city's going through right now because of their primary industry. So we're very lucky right now, and that positive message needs to get out there to give people, what's that hierarchy, that psychological hierarchy called? Where the very base one is safety, and then it's food, right? We need to feel safe, and we need to have food and shelter. Those are the human needs. And we have this army of real estate agents in our community that really understands that at the very basic level, how housing and safety go together. And so that's what I would recommend that your message be. First and foremost, let's be safe. Let's make sure that we're safe. And I think that's a positive thing. So good question, Shelly. Awesome. Okay, so now I want to talk about credit scores. So FHA loans historically are loans that are done between credit scores of 600 and 680. And historically, they have fabulous interest rates, better than conventional, and they have a lot of times what's called par plus pricing. That's where, let's say we have an interest rate of 3.25 and I can pay $3,000 of your closing costs, right, on an FHA loan. That's what we have historically had for years and years and years. That has all gone away. We still have a very good rate. In fact, I looked it up today. I actually can get someone a 3% rate on an FHA loan right now, right? That's phenomenal. There is no premium pricing for me to pay closing costs. There will be closing costs. But here's what's killing most deals. You've got to have a middle credit score above 680. And so you have this huge segment of the population between 600 and 680 that no longer qualify for FHA, USDA, VA, conventional. Nobody out there wants them. So the question is why? It comes down to risk. Loans with credit scores below 680 historically go into foreclosure and default at a exponentially higher rate. Investors don't want any risky loans right now. Think about the people that have lower credit scores. A lot of times they are in the socioeconomic category of loans of people that work in service industries and industries that are being affected by the virus. Tyson, I know you're on the call here. Tyson's my loan partner, and he has a master's degree in economics. I don't know if Tyson, anytime you want to jump in and add to that conversation, feel free to just unmute yourself. But here's what I'm telling people, and I've got a lot of people right now that are in that category that I've credit approved. Just a guy this morning that 30 days ago, he was credit approved at 643 on a USDA loan. And 30 days ago, that was a perfect borrower on a USDA loan. And I love USDA loans, right? So we had a conversation today, what's it gonna take? So I gave him the suggestions, how to get his credit score up. It's probably gonna take him 60 to 90 days. And honestly, in that same time frame, we may see credit scores back off. Once things calm down and investors feel like they are not as such a risk, people go back to work, then I think we will start to see that calm down. So I'm just putting people into my pipeline and giving them advice on what to do in the meantime, how to protect their credit, help it to go up, how to save money, how to really position themselves so that they can still be a homeowner. So any questions on credit scores? Feel free to unmute yourself, raise your hand, because that's really taken a lot of our population out of the housing market. But you know, people just are describing this as a W, right? We're going to see some bumps and bruises. Some people are describing it kind of as a V. I think it's going to be more the W, meaning we were up here, we have crashed as far as some of these things I'm telling you about, not necessarily the housing industry. But then we're going to see it go up a little bit. And then depending on what happens in the fall and winter with the virus, we may see another little bit of a blip. So investors are going to be cautiously bringing back some of these things over time. So any thoughts on that?
So I'll just add that, so Bliss talked a lot about FHA, and that's the big one where we've got the regulation 680 or above or nothing. But even USDA loans, other government programs, like right now I can price out a USDA loan and get you an interest rate, but it's going to come with a bunch of points or additional fees if you're below 700. You have to be above 700 credit score to even get a rate at par pricing, which means no fees, no additional points. And so it's kind of crazy how, I mean, USDA used to be 640. We could go all the way down to 640 and the interest rate actually didn't change that much. But investors are so cautious right now that you basically have to be above 700 to get a USDA loan. And VA is very similar.
Mm-hmm. Yeah. Yeah. And so be prepared that your clients may need more money from the seller to help with closing costs, where before we used to help quite often with closing costs on that. So just as a buyer's agent, that's just kind of an FYI on that one. So you've also probably heard loans above $510,400, which is jumbo loans. Right now, those are also considered a high risk. And if you think about it, a lot of people that are in the higher end homes are small business owners, and they're being enormously affected by the virus and the economic fallout of all of that. And so jumbo loans are considered very high risk. I priced out a jumbo loan this morning at 4.75. So right now I locked someone in on a conventional loan this morning at 3.25. So that kind of puts into perspective. Jumbo loan is at 4.75, and they would have to pay at least one origination. So you have, say, an $800,000 loan. You're going to have closing costs of around $12,000, and your interest rate is going to be 4.75. So about a year ago, I was noticing, year and a half ago, our jumbo loans in some cases were actually better than our conventional loans. And now we're 1.5% higher on jumbo loans. So another question I got, this again was actually Shelly's client, is what about Utah County? Utah County is $510,000. Salt Lake County has what's called super conforming. So you can actually go up to 600,300 before you get into jumbo categories. But those loans between 510 and 600 in Salt Lake County are still considered higher risk. And the rate on that one this morning was about 4.25. So not as good as under 510. Now, here is kind of a creative solution to this. Let's say you have someone that's buying a $700,000 house. They're putting $100,000 down. We can do a $510,000 first mortgage and a $100,000 second mortgage. So they can still get in, you know, with their $100,000 down payment. The interest rate is a little bit higher on the first and on the second. So it's not ideal, but it's better than a 4.75 jumbo loan with crazy high closing costs. So any questions on jumbos or loan limits or how that might be affecting your clients?
I'll just also throw out, just in general, there's a lot less options available to us. There's something called non-QM mortgages. And so those are things like bank statement loans. They're just quirky products. And those are all gone right now. Again, it just has to do with risk. Even things like cash out refinances are getting hit really hard. Investment property loans, anything that's viewed as a higher risk, investors just don't want anything to do with it right now.
And again, I think we're going to do this, right? We're going to go back to being able to do these loans and having them be better, but it's just going to take a little while. So let's talk about investor loans. Oh, Shelly, let me ask you a question. Do you know if we need to do anything differently if someone wants to sell and is in forbearance? No, not as far as I know. Just realize their payoff is going to be higher, and it might not show up on their most recent statement. So if you're selling a home for someone and they're in forbearance, work with your title company right away to get a payoff so that you're fully aware of their costs as a seller and they're not blindsided at closing thinking I'm going to get $50,000 when I sell my house and I end up only getting $30,000. So that's actually a really good question if you guys are talking to people about selling their homes. So I want to talk next a little bit about investment property loans because this is super interesting. So you can buy a single family investment property with as little as 20% down. So this morning I priced out the interest rate on a single family or townhome or condo if you were to put 20% down versus 25% down. So at 20% down, the interest rate's 5.25%, and at 25%, your interest rate drops all the way down to 3.99%. That's an insane margin for an extra 5% down. So if I'm an investor and I'm looking to buy an investment property, I'm absolutely, my cash flow, you know, my profit margin on that is hugely different putting 25% down versus 20%. I think we have a great opportunity as investors to buy rental properties right now. And I would highly encourage your clients that have been thinking, hey, I want to be a landlord. We still have a housing shortage. We have a 10-year housing shortage in the state of Utah. That's not going away. And so it is a great time to become a landlord. Here is where I always advise my clients to look first, is at the equity position in their primary residence. So I'm going to use me as an example. I have a $150,000 line of credit on my house with a local credit union. And I have used it now 4 times to buy rental properties and do some kind of creative financing to look like a cash buyer, and then do delay financing and refinance that over to a conforming loan to pay myself back. People can use a line of credit on their house or a cash out refinance on their house to come up with that 25%. Obviously, you're in a much better position with a 3.99% interest rate versus a 5.25% interest rate on an investment property. And so any questions on investment properties? I think that's a great niche for you guys to be marketing out to your sphere and your database. People that want to sell rental properties and people that want to buy rental properties.
I have a question, Bliss. So in regard to that, using the equity in your home to purchase a property as a cash buyer and then refinancing, what does that look like for the refinance? Because I understand investment properties are also kind of high risk right now, and with the lenders being overwhelmed, they're not super excited.
I'm not quite sure I understand your question. Go ahead and say it again.
So what does it look like right now to do that, to buy an investment property using your home equity loan and then refinance?
It's the same. It's not a problem. Yeah. I mean, everybody's being scrutinized a little deeper when it comes to employment, but you can still use a line of credit to do your down payment on a rental property. It's not a problem. We just have to paper trail it. You cannot do a gift as a down payment on a rental property. And just FYI, as the buyer's agent and as seller's agents, you can never have more than 2% of the sales price go towards closing costs on an investment property. So those are just some side notes, but everything else is pretty much the same. The underwriting guidelines have not changed. Is that what you were asking, Kelly?
Yeah, I might understood that they were so overwhelmed with refinances and purchase risks for primary owners that they were putting rental refinances on the back burner.
You know what? That is so interesting. No, it shouldn't be that way. I mean, as a company, like us personally, we prioritize purchase loans to be done first. But even 2 weeks ago, our underwriters were basically working evenings and weekends, and we were still at 24-hour turnaround for all loans, whether they were a refinance or a purchase. And so, you know, we're prioritizing everybody and getting everybody done. But if we get a backlog, purchase loans go in the front of the line, obviously. So, but on refis, we just do a 45-day lock to be safe. So that's a great question. Thanks, Kelly. And then Shelly, do you know if we need to do anything differently if someone wants to sell? And oh, that's the same. Oh, are HELOCs harder now? You know what? That's a good question. I actually remember back in 2008, I had a HELOC on my house with Chase Bank, which is why I ended up hating Chase Bank, but that's another story. And they basically told me, nope, we're done. You don't have a HELOC anymore. And so, excuse me, my nose itches. I think I owed $10,000, but I had a line of credit for 25. They basically didn't allow me to take out any of my line of credit. Could that happen again? Absolutely. I haven't heard any rumblings yet of that being an issue, but that could affect people in my situation, right? I have a $150,000 line of credit. I don't owe anything on it. Let's say I want to buy something with it. The bank actually has the right to stop that. But I haven't heard of it being done. Has anybody on here heard of that happening with lines of credit? Good. Hopefully we're not. Okay. Any other questions?
I have another question too.
Okay,
Do we
Kelly
expect
and
to
then
see?
Rand.
Sorry, Rand. May 15th is the eviction date. Is that correct? If that's still the date, are we expecting to see? I mean, obviously we don't know, but people may be paying their rent in April because they got a stimulus check, or they may pay in May. But then the whole eviction thing is going to be really interesting to see what happens.
Yeah, I think the problem is you're going to have people taking advantage of that, because honestly, there's a lot of people on unemployment. They're making more on unemployment than I've heard of people that are getting the PPE loans for their businesses. And then they have the money to pay their employees, but their employees are saying, we don't want that because I'm making more on unemployment right now. So it's a mess, and unintended consequences like crazy. So I don't know. It'll be interesting to see how that plays out. Luckily, my rental properties, I reached out to all of them immediately and just said, how are you? How are things going? And they're all paying and they're all good. I'm just keeping and I know, Carla, you've got a lot of rental properties as well. If you have rental properties, or if you have clients with rental properties, I strongly, strongly recommend that you reach out, send them a loaf of bread and just say, hey, I know things are bad. Just so you know, I'm hoping you can keep paying, because I don't want to lose my house because you can't pay me. You know, let's keep this line of communication open. And honestly, if I had one of my clients that lost their, not clients, renters that lost their job and wasn't getting unemployment, I would give them a month off, right? Because they've been great tenants so far. So that's another talking point that you can reach out to your people that have maybe bought rentals in the past. So Rand, did you have another question?
Yeah, I just was wondering if you'd clarify, you mentioned using a HELOC to help you purchase rental properties. Is the purpose behind that mainly just to help with cash flow, or is there some other
So,
reason?
okay, so I like to be creative. So I'll give you an example of one. There was a property in Price that came on the market, and it came on at 80, it was at like 100,000. They knocked it down because it was a divorce situation. The agent's a friend of mine, and she said, you know what, I think you can get it for 82,000. Well, it was a piece of crap. Like, it stunk, and there were holes in the ceiling, but there were some really good bones to the house. And so basically, I used my line of credit to be a cash buyer, close in 5 days. I put 18,000 into it. I was into the property 100,000. Immediately, it was worth 150,000, and I've had that rental property for about 2 years now. Some of the other rental properties, obviously, they cost me more than 150,000, but I had other cash to put into it. And then what it's called is delayed financing. So I go in, I'm a cash buyer, even though I'm using a line of credit. According to the buyer, just needs to know I can pay cash in 5 days, right? Then I have 6 months to do a non-cash out refinance, so I get low interest rates. It's a rate and term refinance. I have to paper trail how I paid cash for that property. I have to use the sales price as the value. So even though I paid 82,000 for that, I can't use 150 as my cost basis for the refinance. I have to use 82,000, and I can pay myself back up to 80% of that sales price. In this market, I do 75% just because of, like we talked about, with the interest rate. So it's just a creative way. All of my rental properties, I've kind of got, they were distressed. Either they were a divorce situation, or the sellers had a couple of failed sales. I bought a townhome in Eagle Mountain in December that had 3 buyers fail on them. And it was also a divorce situation, and they were desperate. The agent contacted me and said, hey, if I knock my conditions down, this is the bottom line of what this guy can sell his house for. It was like 250, I think 253. She says, I've got an appraisal at 275. We're just looking for someone to save us. I was able to come in and do that transaction. So it was just a creative way to do it. So does that kind of help answer your question, Rand? Okay, cool. Anybody else have a question on here? Awesome. All right. I want to talk about, think of any other questions you have about financing and clients, but I wanted to bring up a couple of other things. So first of all, next Tuesday, I'm doing an event where I'm going to be interviewing Craig Sewing, who is the founder of American Dream TV and just wrote a best-selling book called American Dream 2.0, and Seth O'Byrne, who is on HGTV $1 Million Properties out of San Diego. And I'm interviewing both of them about what real estate agents can be doing virtually. Not only, I think that one of the cool things that's going to come out of this is we're all going to be looking at our businesses differently and becoming more efficient, because we're all going to have virtual technology. So I'm going to interview them. So Seth has done $60 million worth of transactions since all of this started. Like, he's phenomenal. And I'm going to interview them on how they've been doing that. So watch for an invite to come out about that. It'll be next Tuesday. And then the other thing is just kind of a personal thing. I've been involved with Builders Without Borders for a number of years, and I'm putting together a fundraiser for, we're going to be purchasing Spanish children's book. I'm a big reader, and I'm a big advocate for children reading. So just doing a little fundraiser over this weekend for purchasing Spanish language books for children. I was supposed to be going on a humanitarian trip to Mexico in June. That's been pushed off, which is good because my Spanish is still terrible. So maybe by fall I will have better Spanish skills. But I'm super excited about that. Honestly, $10 is going to basically sponsor a child to get a couple of books. So watch for those 2 things that are going to be coming out. Any other questions about mortgages, interest rates, my dog, anything? This is your opportunity to just ask questions. Yeah, Millie.
I got an offer on a house just yesterday, and the agent is saying everything's taking longer. I need to delay financing, appraisal, all of that.
I am so glad you brought that.
What are you seeing as far as delays?
Okay, thank you. I hadn't even thought of that, bringing that topic up, and I am so glad you brought it up. So first I'm going to tell you, on a lot of transactions on conventional loans, we're getting appraisal waivers. That's helping tremendously. You do have to have pretty good credit. You have to be having, I've seen it with as little as 10% down. It's more likely if you have 20% down. Obviously, getting an appraisal waiver helps quite a bit. We don't know if we get that until we actually have a property address and run the client through automated underwriting. Things seem to be taking a little bit longer, but I've heard rumblings of companies out there, even on purchase transactions, taking 45 to 60 days. I got a transaction today, actually, from it's new construction, which I always fight for new construction, and it's hard because the builder wants them and gives them incentives to use their lender. He's closing in about the 1st of June, so a little less than 45 days, but more than 30 days, right? The builder's lender said, I don't think I can do it that fast. So he came to me and he said, can you do it that fast? And I said, absolutely, I guarantee it. And the reason being is we have worked really hard to set up systems, not only my team. So my team is myself, Tyson Cook, and then production manager Joni, and my processor Jen. We're all set up with great systems to move things along really quickly. But also on the upper level of Security Home Mortgage, we have 3 underwriters. And like I mentioned before, even 2 weeks ago, when they were underwriting triple the normal volume, we were getting stuff done and underwritten in 24 hours. So this sounds like I'm bragging. Okay, I'm bragging, right? Because I know we can do it. We also qualify people before they have an accepted offer to the point where we know what needs to be done and we've worked out problems. Does that mean there won't be any more problems and it'll be perfectly smooth? Absolutely not. There may be problems. We really stay in touch with our appraisers. We make them commit to a, what's it called, a date? Oh my goodness. Sorry.
Deadline.
Thank you, that word. They commit to a deadline, and if we get to that deadline and we haven't heard from them, we are on the phone. So the most I've seen an appraisal miss a deadline is 2 days, and it was actually because he couldn't get into the property when he tried to. So that was a little bit out of his hands. One other situation, the appraiser, his wife ended up in the hospital. So it was really one-off situations that would have happened in any market. So if you're getting pushbacks from your buyer's agent, get a second. You know what? As a listing agent, honestly, you have the right to require them to get pre-qualified with another lender. You can't force them to use another lender. But let's see, you know, if we can match the rates and fees they're getting or do something better, and we can guarantee a 30-day close, why would you stay with the other lender? What's your reason for it? And so, yeah, I think that's super important. So that was a really good question. Thanks, Melly. Anybody else?
Well, I'll just add with that, I think a couple weeks ago, appraisers seem to be taking longer. I mean, we never missed our deadlines, but I think it's kind of back to normal now from what I've seen. The past couple transactions I've worked on, we've had the appraisal back in plenty of time and closed early. Mm-hmm. So I don't think that's been an issue. One of the big things that still is an issue is getting tax transcripts from the IRS.
Thanks for bringing that up.
So it usually takes 3 to 5 business days when we request them. It's taking 20 days. So usually what we're having is just the borrowers request it themselves and they can get it instantaneously from the IRS website. So we're not even going the third party route anymore. We just have to ask them to do it.
Well, and I'm glad you brought that up, Tyson, too, because that's what we try to do. We try to find ways around it. So for example, normally consumers don't even know that we get transcripts. And right now we're only having to get it if you're self-employed, not on all loans, thank goodness. But if you're self-employed, we give you the website and the instructions on how to get them yourselves. It's a little bit of a hassle, but you're buying a house. So you're gonna have to go to a little bit of a hassle and help us out. And my clients have been super amazing at doing that. And you know what, we're not waiting till the underwriter underwrites the file and comes back with that condition. We know up front it's a problem getting transcripts, so we're going to ask your client to help us with that up front. And so, yeah, great point, Tyson. Thanks so much. Any other questions?
They can do it in 10 minutes. It's not like it's a huge long process. It's
my neighbor took him an hour. So we'll say between 10 minutes and an hour.
We'll say user dependent on
right.
comfort with technology.
Yeah. Because basically the IRS has shut down 3 of their facilities that out of 4 that perform that specific task. And they are not really very good at working from home. And so they have said it's at least 20 days. But I think we haven't even gotten them back in 20 days on some of them. So we don't even bother. We're just having the client help us with that. So any other questions, anybody, about financing or the market? Bryce.
I have a question. You know, kind of seeing that a lot of our transactions take, you know, a month and a half to make people decide to pick a house, to get everything, you know. Do you think that in the next month and a half that we're going to see a drop in our production? Because, I mean, we all kind of stayed pretty busy up until now, you know, with all the refinances and with everybody. So what's your thoughts on that?
So I think that if we get the right message out, and part of that message needs to be that I think buyers have a unique, if you have a job and stability right now, and you've thought about buying a house and you have credit scores above 680, don't be shy about this right now, right? This is an opportunity for you to be a buyer in a little bit of a buyer's market in it. And we're going to go right back to a seller's market as soon as jobs open up and confidence comes back. And so we may see a little bit of a dip, but if I were a buyer right now, I'd come into that dip with my guns blaring. Let me buy a house, right? So if we see a dip, it's going to be because we've taken so many people out of the market in those lower credit score ranges. But think of the opportunity. If you're a buyer right now and you have a large down payment and you're looking in that upper end and you can keep your loan amount below 510, there's a really good opportunity for you to get a great deal on a high-end home right now for somebody that absolutely has to sell. So yeah, I think we might see a little bit of a dip, I'm sure, because, you know, chime in, all of you agents on here. Obviously, you have seen things slow down. But that's an opportunity for you to work on your business so that when we get summer, fall, winter, you've got buyers and sellers that the silver lining is they don't want to work with the people on the billboard. In fact, let me tell you a story. Monday night, my cousin called me, and she owns a townhome, and they're moving to Las Cruces, New Mexico for a job. And so they have to sell. Right? Well, we talked through the options of renting it, but she didn't really want that. And she said, okay, tell me, have you heard of Bumblebee or Honeybee? Which I'd never heard of them before. I guess they're trying to be a competitor to Homey. And I said, no, I haven't heard of them. She said, what do you think of Homey? And I said, well, do you want my honest opinion? She's like, yeah, that's why I asked. I'm like, I can't stand them as a lender. And let me tell you why. So first of all, it doesn't mean people haven't had good experiences. They have, but my experience has not been good because at what you're paying them, they can't afford to give you the service an agent can give you. You're getting what you pay for. And you also still have to pay a buyer's agent. And she said, well, yeah, but I can choose between 2 and 3%. I said, okay, if you choose 2%, let me tell you what's probably going to happen. Might not be right, but if a buyer's agent has a choice of showing their buyer a house at 2% or 3%, they're going to probably emphasize the 3% because they've got a lot of work and time to attain that buyer and to help them. So you may not have the same number of people looking at your house if you do it that way. And we kind of talked through that. And then I said, did you know that when you sign the contract with them, there's a paragraph in there that says that you cannot disparage them on any social media platform? So basically they're saying we can sue you if we do a bad job and you say we do a bad job. Think about why they would put that into their contract. So 30 minutes later, she called the agent that helped them buy the house and listed with him. So you have this opportunity to create more trust and more of a deeper relationship with your clients because of what's happening. And guess what? You have time to do that right now, right? So I wrote this down. Actually, it was the call I was on right before this. Your 3 top priorities as you're talking to your clients, right? Your message to them. I'm sorry, let me rephrase that. This is my message to you as a real estate agent. I got 2 things mixed up. So first, stay safe in everything that you're doing as you're showing houses and listing houses, right? That's first and foremost. We all need to stay safe and slow the spread of the virus, right? The second is going to be clean up your business. Use this quality time that you have right now stop binge watching Netflix, and I'm saying that to myself. But clean up your business. And then the last thing is use that to stay top of mind. I've given you, and you guys have brought up a lot of talking points that you can go out and drip messages out on social media and when you're calling and when you're texting your clients. So any questions on any of that, or do you guys have any thoughts on any of that?
I'll add something that I was thinking about earlier. So as Bliss mentioned, I went to graduate school and got a degree in economics. And one of the things that you always assume in an economic model is that people will act rationally. And when running models, that's fine. But in the real world, that's not always the case. And there's two main reasons for irrational action: fear, which there's a lot of out there. People are scared, and lack of information. So if somebody's making an irrational decision, it usually comes down to one of those two things. So as experts in this industry, we can fill that void of lack of information. I've heard a few times from people that want to buy a house that say, you know what, maybe I'll wait till the next crash. Maybe I'll wait till the housing market crashes. But that's likely not going to happen. The circumstances surrounding this recession are very different than what happened in 2008. So if we can tell people why there's a recession right now and why the housing market, especially in Utah, is still going strong, then they can make a better decision. They can make a more rational decision. So I think that's something, if we have more time on our hands, like Blissa said, just give information, just let people know the current state of things and that there is opportunity. Yeah, it's tighter. There's less buyers just because they may not qualify. But for those that can, they still should. It's still a great time to buy a house. The last few transactions that I've done, they've gotten thousands of dollars in closing costs from the seller. I don't think it's a buyer's market to the point where sellers are, getting gypped and losing out a lot. But I think it's balanced a little bit. We're not seeing crazy bidding wars right now where the sales prices are getting pushed way above asking. It's evened out a little bit, and I think there's a great opportunity for buyers.
Well, and on that same note, I want to talk to you about the value of storytelling. So Carla and I did an interview a couple days ago, and she told a story about a client of hers in 2008 that did a forbearance, and they were not correctly informed, and it did end up in foreclosure. They had no other choice at the end of the forbearance. And right, so think about what you know and the people that you've helped and the stories you can tell, or one person removed. Hey, I know someone that shared this experience of their client. So that I think that not just giving information, but information through stories is going to help people to feel more connected to you and really give them a reason to call you when they have a question or a need. Like the situation of my cousin, right? I think, honestly, a month ago, she wouldn't have called me. She just would have signed up with Homey. Now, I have no way to prove that, but I do think there's a silver lining here that's going to benefit you as a real estate agent. So any other thoughts on that? And then we'll just wrap it up.
I think just to kind of piggyback on what both you and Tyson both said is kind of the information, the stories, the videos. I think it's a great idea, and I'm willing to share or even try to make one with either of you, but a way for us to get out there and share each other's content, context of that it's still a good time. You can still, just to give people information, because a lot of what Tyson said, there's a lot of fear out there and people don't know what to do unless, they're given that information and kind of things to bounce off and understand. So,
and people make poor decisions when they're afraid. Like, seriously, if you're going to come up to me with a gun, I'm just going to scream like a little girl and do nothing else, right? There's probably better choices than that. Now that's not a great example, but right, let's give people ways to deal with their fear. And here's another thing, let's support each other as an industry. As you see social media's posts of giving information, most of us are friends on social media. Let's support each other and let's like and comment and just say, hey, thanks for the information. That's very valuable. We appreciate it. I think that's a great way for us to support each other, and together we are stronger. Yes, a lot of you are competitors with each other, but I personally feel that working together, we all win. So anyways, great comments on that. Anything else before we wrap it up? Okay, I'm really excited to know that I did a Zoom call with no technology glitches on it. Can we just give me a high five? But I will continue to give you guys information. My goal always is to help you build your business so that we then all have more business and can work together. So if Tyson or I can do anything at all to help you, feel free to reach out. If you have more questions on any of the topics that we went over or want some additional information, just shoot us a message and we're glad to help with anything on that. I'm going to also reiterate, I'm happy to do a Zoom meeting. I did pay money for Zoom, so I have a few extra bells and whistles. Don't know how to use them all yet. But we can do a Zoom interview, literally 3 to 5 minutes, that talks about forbearance or anything that you want to talk about that then you can push out on social media. It makes you look like the expert. So let me know if you want to schedule that and we'll get it on the calendar. I think time is of the essence. The person that moves quickly on these things, even though you might be a little unsure on how to do the technology or what to say or how to interview, those that move quickly are going to be the ones that reap the benefits out of it, because over time it gets saturated. So let's do it quickly. If you want to do it, we're happy to help you out on that. So have a great day. Let us know what we can do to help, and enjoy your DoorDash for lunch today.